Good afternoon, everybody. Welcome back to the Schwab YouTube coaching channel known as Trader Talks. My name is Kevin Horner, and I am here for Trading Price Patterns. Thank you all for joining me today. We are going to spend some time looking at a bunch of charts with all of you, utilizing the scan function in the Thinkorswim desktop application as we do it. I'm very excited to do that for you today. Of course, we've also got some symbols and trades in our example portfolio. Those are example trades, of course, that we're going to need to revisit and check in on, see how things are going. So I'm glad you are all here today. You can say hi to my friend and fellow coach Brent Moores in the chat. He and I had a lovely discussion this morning as we kicked off the market today. You can also follow Brent and me on X, Kevin Horner, CS, Brent Moores, CS. So we're lucky to have Brent there chatting with you all today. He'll get to questions, comments that I'm unable to discuss in the segment here, but of course, those are important nonetheless. I want to hear from you, so I'll keep an eye on things. If you've got specific questions that are germane to the conversation and that I can address, I'm happy to do that live and in the moment. So we'll work on that too as we get through the conversation. So let's get to disclosure details so that we can jump right to it, everybody. Please remember that our discussion here is exclusively informational and educational, meaning we do not make recommendations. We do not make endorsements for a specific approach to trading the market. We will discuss technical analysis, but remember that technical analysis is just a piece of the puzzle. We discourage you from making decisions exclusively off technical analysis. It's also important to know that options carry a higher level of risk and are not suitable for all traders. Characteristics and risks of standardized options is a document that you can obtain by giving a call to Schwab. We're available for you 24/7 every day of the year. We would encourage you to be familiar with this document, of course. And remember, in order to trade options, you do need to be approved on each individual account in which you might like to do so. Here at Schwab, we work in a paper money version of the Thinkorswim desktop application, and we may very well be discussing some sold options today. That is to say, short option positions. It's also important to know, though, if you're trading in the paper money account, when selling options, you always have the obligation to do something. You will either, as the seller of calls or the seller of puts, be required to buy stock or sell stock and at certain times, but that will never happen in the paper money version of Thinkorswim before expiration Friday. However, that absolutely can happen in a live scenario. In fact, anytime you're the seller of an option contract as the opening trade, you have the obligation and can be obligated to buy or sell stock in advance of expiration, even if your contract is not in the money. So that is a key component. If you're not familiar with that, we would always invite you to have a conversation with a representative. Again, available 24/7. So we would encourage that if you've got concerns or questions. So we're going to jump right to it, everybody. As I mentioned today, we're going to start with a discussion around the use of the scan tool. And I wanted to provide for you a scan script that I think could be, for some traders, certainly dependent upon your time frame, proper opportunities to participate in current trending situations. So we're going to jump over to the scan tool here, a tab within our Thinkorswim desktop application, and we're going to not only look through the scan, but we're going to discuss why we've selected what we've selected here and how to make adjustments along the way. So a couple of key components that we've built in to my what I've referred to now as the 20-day moving average pullback, which is scanning within the S&P 500. So here, what we're looking for are stocks whose last trade or closing price is above the 20-day simple moving average. Okay, so step one, we just want them to be trading above the 20-day today. And as you'll see, as we work our way down the list here, we're going to incorporate additional criteria that are going to refine this scan quite nicely. So off the jump, very basic, stocks over their 20-day moving average that are participants of the S&P 500. Next up, we're going to look at the study that I've created involving the simple moving averages. So I'm going to click my pencil here, and it's going to open up my window. And what I have are two separate specifics here. So I'm going to edit, but I just want to view this. So I'm going to edit it so I can show everybody what I've created. And it's very simple. All we've stated is we want the simple moving average, in this case, the 50 period, to be trading above a 100 period simple moving average. And so what that simply states is that in an intermediate window of time, the 50-day being above the 100-day, the implication is that we are likely finding stocks in an intermediate term uptrend. Now, that can be very helpful and might be sufficient for a lot of traders, but we could also, as we've done here, incorporate a faster moving average scenario as well. And I have in this instance suggested I want the 20-day simple moving average to be above the 50-day. So not only do we have a 50-day above a 100, we have a 20 above a 50. And again, our implication is that we have both intermediate and short-term short-term trends working bullishly, okay? So we've incorporated, hopefully, that we'll find stocks that are already in uptrends, giving confidence for the bullish trader. So yes, this will be specifically a bullish scan today. Now, we're going to get to more granular detail that allows us to know, are we possibly testing support with today's price moves? So we are going to incorporate a study that suggests that the last trade, or pardon me, today's low is below the 20-day simple moving average. So we should see stocks that have tails under the last trade, indicating that we've traded through the 20-day moving average to the downside and found support and have moved upward from there. And we know they've moved upward because our next study in this particular scan, everybody, is that we want the close to be greater than the 20-day simple moving average. Now, reminder, if we're utilizing this during a market day, like in the midst of the move, like we are right now, then what we're stating is today's intraday low is below the 20 period, but the close, aka the last trade, is above the 20-day. So below it intraday, but last trade above it. Now, for some of you, you're going to say, hey, that's great, but that's not a closing basis, and I'm not going to be comfortable stepping into a new trade at a 20-day moving average unless there's some validating reason. For many traders, that validation comes in the form of a closing value over the 20-day. That's fine. But what it could very well do for you today is give you the watch list that you will utilize and incorporate maybe in the final 5 or 10 minutes of today's session, or set you up for tomorrow morning as well. Maybe tomorrow morning you're going to have the confidence to step in to any of these possible positions. Okay, so we can incorporate additional criteria, as Chris is noting here. I'm happy to incorporate volume. And granted, I did not do that in my pre-work, but I don't know that that's going to hinder us greatly. So let's go ahead and just add one in so that we could see if potentially there's a way to refine this list a little bit further. So let's do that. Let's add another filter here. And we're going to make this one a study filter as well. Now, the reminder that I'll give you is whenever we add a new study filter, it always defaults to ADX crossover because that's the alphabetically the top one, okay, the first one there. But what we're going to do is click on the pencil that opened for me in another monitor. I'll sling it over here, and we're going to delete it and start from scratch by clicking Add Condition. And by the way, this is also how I may go about that process. So we can go here into Study, and we can put a volume minimum here on the position. So for example, let me see if I've got, oh, you know what? I've made a mistake here, everybody. Let me step out of this. I apologize. We want to cancel that. We are going to volume here. This is what I wanted to highlight. So here we can say that we want to see average volume of a certain amount This can be helpful, okay? So maybe you want to incorporate stock that are at least trading at 1 million shares a day. That can eliminate some of your positions. As you can see in my scan below, I do have 4 stocks that haven't yet traded to 1 million shares, but they probably have an average 1 million a day. So that's one alternative, as is the unusual volume, which could suggest that today's volume is greater than, by a certain percentage, an average period of volume. So, for example, here you might suggest something as limited as a 10% increase in volume today that is greater than the average of the last 20 days. Now, the challenge here, everybody, is if we incorporate this, not every stock will be in excess of its average volume at the halfway point of the session, right? Some of this will be done later in the day. Some of these may not even appear. So I have to at least let you know that while we've added 2 or 1 component of potential volume increase here, it could wipe out all of our list. So be aware of that, okay? So in fact, let's try that. Let's go ahead and use that volume average, the increase to average volume over the last 20 days by at least 10%, which would speak to today's volume specifically. So let's see if this cleans the scan entirely. Okay, as I was afraid. So 10% is too great in this instance to give us anything. If I changed that to 5% and tried to rescan, we're also not getting anything. So we don't have any true big volume moves in stocks that are doing any of the 4 other basic criteria we've discussed. So we're going to go ahead and eliminate the volume here, but it would be, yes, Chris, great point. Potentially adding this volume in here would be appropriate to do on a post-market review to see if there were stocks in that given day that did have increased volume like that. That would absolutely be true. And yes, everybody, I'm happy to share this scan with you. Give me just a moment. I'm going to take us through this in its entirety and highlight everything that I want to, and then I will wrap the portion here on the scan discussion by putting it into the chat for you all. So we are going back to our basics, everybody, not incorporating volume, just looking at price. Hit that scan tab, and now we've got a list. Now, even better, I'm going to start from scratch over here on my gadget zone by clicking the plus sign and loading a new watch list. And I don't know how many of you are aware, but I love bringing this up. When you have done a scan and saved your scan, and in my case, I've saved it as the 20-day moving average pullback, it is then going to be a personal scan available for you, which means it's a dynamic personal scan, everybody. So when I click on 20 DMA, notice that target there, that's what tells me it's a dynamic scan, or a dynamic watch list, excuse me. So what that means is that as stocks meet our criteria here, they could be added to the list here. I don't need to rescan. It also means that any that suddenly no longer meet this criteria, that is to say, trade back below the 20-day, now they're going to get booted from that list. And so once you've done your scan, you can just sit back and use your watch lists, right? And just work through them to find your opportunities. Okay? So that's one way to do this. Now, I do want to highlight a couple of the charts here just to illustrate that we're getting what we're looking for today. So did we have in this one a low today that was below our 20-day? Our 20-day moving average sits at, well, I'm going to have to hit that value there. The 20-day is $70.41, and our low today is $70.36, and we are currently above the 20-day here. So here we go, everybody. There's one that was below the 20-day, tested, and might be ready for a refresh, right? Might be ready for a new move after this initial breakout and throwback. So this one fits what we asked the scan tool to do for us here, and may very well be a setup. Now, what about Cisco Systems? Same thing, intraday below the 20-day and currently above it. Eversource, intraday below the 20-day, currently on or above it. Fastenal, ooh, this one looks interesting, everybody. Maybe this is one for an example trade. In fact, why don't we, let's use Fastenal here. Let's go ahead and get one in on this based on this potential break to the upside of what was about a 2-week bull flag through here. Nice and steep bull flag. And if you, pardon me, if you are a trader who says, I am looking to enter on a first move above the flag downtrend line, well, then today could be that entrance. Now, some traders are going to look at the low we created over the last week as the ditch out spot, a spot under which they would place a stop order. That would make some sense. Notice the current price, though, 46.66 down to about 45. We got to risk $1.60 to $2. So that means we have to believe that we've got proper reward for our risk. So we'd have to be looking for about a $6+ move to the upside if we were willing to risk 2. That would give us a 1-to-3 risk to reward ratio for an equity trade. And I think that's what we're going to do on this one, everybody, is build a quick equity position. And let's just go with a stop order down below under 45. And we'll do it as a bracket. We'll see if this works in our favor, whereby we're into the position, we've got a stop order beneath us and a limit order above us. And if the trade goes to either our worst case scenario, we get stopped out, so be it. Or if we go to our best case scenario, we get sold at a limit and we take on from that as well. Hey, Zinc, I see where you're coming from. I'm going to make an adjustment to the scanner momentarily. We're going to go ahead and place an example trade on this. I'm going to share with you. See, I hope you all noticed we just lost a stock from our watch list there. One of them came back probably below the 20-day moving average and got kicked out. So we'll place this one here as a bracket order on Fastenal, and we'll see how it goes for us. It'll give us something to check in on here next week. So we'll do a buy custom with an OCO bracket. Again, that's a one cancels other. So that way we do not, we can't duplicate the sales, right? We will either sell at our limit or we will sell at our stop. Now, we're going to put ourselves in the trade right away with a market order. And then we are, like I said, we're going down to about 44, under 44.90. So let's go with a nice odd figure. 44.87 will give us a little less than $2 of risk. And then our entrance, we should be looking for about 6 points to the upside, which would be about 52.60, let's say 52.5 for our limit. And again, I am not in this instance, everybody, incorporating a whole lot of analysis other than to suggest that trading to a new intraday, or pardon me, a new low in here. Ooh, that low is under 44.87, 44.97. So we need to go under 44.87 at least to give us a little bit more wiggle room. So we're going to go even lower, everybody. Give that just a few more cents. So down to 44.67. So we can't validate or guarantee, of course, that we would hold here. But at 44.67, the stock would be making a new short-term low. And that would at least give a trader potentially the reason to believe that they can move on from the trade. That is a spot where a bounce is possible as well. And I need to remind you, with a stop order, everybody, that's simply a trigger. And once triggered, becomes a market order. So we have no guarantee of price at all, right? But the reasoning behind the trade is leaning into the price action. So I want to address a couple of comments here real quickly from Time to Relax and Focus. Narrative can play into price movement. You're absolutely right. And I do not wish to downplay that. I do wish to highlight why we are talking about this position, though, as a potential trade. It's all tied to the continuation of what's been working. An uptrend moving from lower left to upper right, a test and maintain or hold of the 20-day moving average, and today's action trading above the high trade on the low day. A possible hold move. Now, it is not a hold because we have not closed yet, but that's what a trader might be looking for. And for some traders, one day or the single day it happens to make a purchase like this could be aggressive in many traders' eyes. You're not wrong. But having a plan and knowing how you want to address these types of trades is key and paramount to every individual trader's process and opportunity for success. Some of you would state that you'd look for day 2 above the 20-day or even day 3 or longer. No problem. But have that plan, have that playbook, and give yourself the ability to simply refer to something that'll help you make those decisions in the moment. So that's why we are looking at this for an example trade today, but a very much perfectly appropriate time to relax and focus to be bringing those details up. They are part of the decision-making process. You're absolutely right. Okay, so we're going to go ahead and follow through a market order to purchase, followed by a limit at 52.5. and a stop at 44.67. We recognize, again, no guarantee of price on that stop order. And reminder, you do have gap risk in the instance of the stop order. So that's one of the reasons that that price cannot be guaranteed. All right, so we got our purchase. I'm going to jump back over to the monitor tab, and I'm just going to move my Fastenal trade to my trading price patterns group so that I can reference that with you all next week. And then coming back to the scan tool, I'm going to go ahead and share the scan query. Now I need to remind you, everybody, scans, scripts, charting scripts, grids, etc. Anything we choose to share with you all, these are not guaranteed for timing or accuracy. They are also not a recommendation for your use. But I want you to have that 20-day simple moving average pullback. And now I'm going to go ahead and launch a 50-day simple moving average pullback right here. But before I do, I want to just point out, everybody, it is super simple to take the criteria I've built for you there with the 20-day and just make some adjustments. You know, you'll go in here to the first study, click the pencil, and then change where you've got the code. And for the record, you know, this is stuff that I had to steal or utilize from a colleague. All right, so we just go in and make the change. So where it says 20 period, we're going to make it a 50. And this is looking to be within 1.5% of the 50-day moving average. So basically being in the vicinity of that. That's what we're looking for. So you can make those alterations yourselves, and it can aid you in learning a little bit more about the way Thinkorswim thinks about how you make these types of adjustments. It's really a good way to further your understanding by just simply taking something that you know works with specific criteria and then making small minor alterations so that you can get them to fit what you want from your trade. So let's go ahead. I am going to make that easy on you all. I'm going to go to the 50-day simple moving average pullback. I'll hit scan on that. So we do see some symbols we're unfamiliar with or new symbols to us. We'll move it over here and go to our personal list for 50-day moving average pullbacks. And there it is, those same stocks. And now I'll go ahead and share this one with you as well. So you guys can all have that. And if you'd like to utilize this, there you are. All right, so now you've got a 20-day pullback, a 50-day pullback. Let's take a peek at some of these 50 days. We've got Boston Scientific. Nice, interesting tail down there, everybody. I'm curious about many of your thoughts on this one, everyone. Let's just talk about this from a generic standpoint. You've got a nice uptrend working, right? You will note, however, we have traded up to this area and failed before. This is right around 107, 106, something like that. Yeah, 107. So some traders might just be willing to sit on their hands a little bit here, everybody. Maybe you're the trader who wants to be a buyer at support and you'd feel better about buying it at the 200-day, noting that the last time it was at the 200-day, we finally got a pop, right? We rallied up to that 107. In fact, that made a really nice move, 87 to 107 quickly. So some of you could make that justification of waiting until it gets to the 200-day. Some traders would just wait for a trade through to a new high. If we back this off and look at it on the weekly, My goodness, wouldn't a test of the 40-week be fantastic in this scenario for many traders? I mean, just look at that. It's been like a magnet. In fact, we could even put a line in there. No, so you've got a really long trend line that could go out to this area. And if we drew one from the last lows, we could possibly look at it like that. But ultimately, that pink 40-week moving average has been providing some support along the way. That probably holds the majority of validating support for the stock in the eyes of many traders at this point. But from a standpoint of taking a trade, it's not necessarily ready to go, as many traders would look at this one, right? You are above the 50, but we haven't really moved anywhere over the last few months. This one might be a wait and see on a potential breakout. Let's see, CRL. I'm not familiar with Charles. Okay, Charles River Labs, it looks like. Bit of an uptrend in the short run, but we still have this long-range downtrend working. We know that because we've got that blue 200-day moving average reflecting a pretty decent slope to the downside. And so for some traders, they're going to want to see action like we had here, but they're going to want to see the stock back above the 200-day before they've got the confidence to really work on that one. We'll keep working through. ECL, a little less likely. Excuse me. Also waiting on a potential breakout there. About Lam Research. Well, there's something a little more close, right, everybody? You have pulled back, and we could be buyers at support. And in any example scenario, and we are right on the 50-day, and our intraday low hit the 50 days, so that's certainly a possibility. All right, so we'll put a pin in Lam Research. What about 3M? 3M's not bad, but it has been going kind of mostly sideways in here, right, everybody? I mean, we've had some tests of support around 140 or so. It did get through some resistance very briefly on that last earnings, but it did not hold. So, you know, a lot of traders would tell you you're really still in a 14, 15-point range on 3M, not necessarily offering traders just yet an opportunity unless they were maybe looking at selling volatility, right? Taking advantage of more consolidation potentially. News Corp had a huge open that just didn't hold. Looks like they had earnings late yesterday, opened strong but faded into the morning and had traded below the 50-day. Certainly an opportunity for some traders with guts. From a technical standpoint, I don't know the story behind this. So, of course, when you're starting to see you see a hot open like that fades so quickly, not everybody's going to be all that enthusiastic about. And again, reminder, we're looking at bullish scans because we've got stocks that are trading in bullish trends, right? Short-term moving averages above intermediate, intermediate above long, etc. You wouldn't necessarily be comfortable taking a bearish position when scanning bullishly. So this would likely lean more bullish. I could see a trader who believed in the initial reaction, maybe being a little more comfortable putting on a trade like this at this point. If they believe that this support at the 50-day moving average around 33 and a quarter would provide that for them, they may very well decide to put a trade on. Now, what's notable about doing it at this point is that if we incorporate the implied volatility, we will probably witness that the IV has sold down a little bit on an overnight basis. So it is lower than it had been, but you could possibly use this as a justification for a long option position, right? When IV is retreating or lower, you get more bang for your buck to own options more so than you do to sell options. And ideally, you might sell options when IV is high. So maybe this one could offer a trade like that. Let's see, what about, same thing here, obviously, News and News A. AT&T really just sideways with a very gentle uptrend. And then Waste Management. And I'm looking at these 50-day moving averages, everybody, and these pullbacks don't quite seem to be as excitable. And there's part of that is, of course, tied to the time frame we're looking at, right? If we're talking about 50-period moving averages, we are definitely incorporating a more intermediate time frame than anything else, right? And so perhaps where the 50-day is giving you more gentle trends, perhaps the trader thinks about those 50-day entrances as maybe equity positions in lieu of options, potentially leaning on the options for the shorter term ideas. That might make some sense. And as Relax and Focus is pointing out, of course, sector might play into your decision making here. We've had some good moves in leadership from technology and financials and industrials, but other groups have not been quite such good leaders. For example, healthcare, not exactly a great leader. So maybe as good as maybe the chart on Gilead, for example, might suggest, oh, we've got a new uptrend, and hey, we're on support. We're sitting on the 50-day moving average that we were on previously, and that one more time. Give me that oval there, everybody. There we are. So there was support, and then there was support back here. So you could look at this and say, yeah, that makes sense for a trader to maybe position in Gilead Sciences. But at the same time, you might not have the confidence to do so when healthcare is not exactly trending right now. If it's trending more sideways than it is upward, right? And so it's a great point, Relax and Focus. You may not want to be in groups that broadly are struggling or not trending bullishly, because that can overweight some of the movement you get from your stock that trades within that group. Sometimes it can lead to weakness in the stock that's not necessarily tied to the stock. How many times have you owned a position in any given sector, and for whatever reason, the market is down on a given day, right? The S&P is weak, but the news of the reasoning behind it isn't tied to the stock you're in or the sector in which the stock you're in resides. It's just broad market weakness. Well, you can often see your stocks going down on such broad market weakness. We can work to reduce that risk. We will never eliminate it, but we can work to reduce the risk of broad market weakness playing into the movement of our underlying stocks by picking stocks in groups that are already bullishly trending. And so, yes, time to relax and focus, that might, for some traders, push healthcare stocks to the sideline. Now, you might also be thinking, what if, it's not healthcare exclusively, but what if it were biotechnology more specifically? Somebody might be wondering about that. Let me see if I've got a biotech. There is a biotechnology total stock market index. So this group looks a lot more healthy than the healthcare sector collectively, but you can see it is still in a bit of a downtrend right now. Short term uptrend, we could point this out, pretty obvious right here, but it may not be in an uptrend for long, especially if it breaks the 50-day moving average there. So again, something to keep in mind. I think that was a great point when trying to consider the stock that you're looking for. Which one is going to be the right trade for you? Having a stock that is participating in a group that is collectively moving higher may give you more confidence as a trader in these scenarios. So that's a great discussion. Okay, let's come back to, we're going to change this again to the 20-day, and let's see if we can't locate something that makes sense on the 20-day for a bullish trade, utilizing a setup in probably like a bullish vertical call spread or something along those lines. So let's see what we've got in our list. So we talked about a couple of these. So Blackstone tested the 20-day, is right at it. We're not above the low of the high trade of the low day there yet. Could be talking about Cisco, a potential for a breakout. We've got Eversource. We've got Edwards. We did an example trade in equities in Fastenal. IQV coming right back to the 20-day. Some traders would say a little too many red candles there as the pullback has occurred, and it hasn't quite stopped the selling just yet. So maybe some patience there. Nike. Well, Nike's getting to be a little intriguing. What do we see here, everybody? We've got a gap zone from the last earnings. Gap has been held since the last earnings, so that seems kind of notable. And we've made higher lows since the last earnings. And if we drilled into what's been going on of late, we have the low day and the pullback right here. The high trade that day was 74.70, and we closed above it yesterday, back below it, or 2 days ago, back below it yesterday, and then today back above it. So if this were to close this way, then many traders might look at this and say, there's an opportunity for a potential continuation move in Nike. We also have Realty Income. That looks a little more likely a flat position. Going to hit up Trimble, holding its 20-day. That might make some sense for some traders. And then Warner Brothers coming back to test the 20-day, has been above the 20-day for a while here, everybody. Really back to late April, like many in the marketplace. That's a kind of intriguing one for consideration. I want to come back, though, and look at Southern, because this one caught my eye in the pre-work I was doing, everybody. Let me show you why. First of all, you've got this kind of a developing bull flag that was broken to the upside, and really the flag itself is kind of out of the mix, so to speak. What's happening right now looks more like the potential for the breakout. I think a lot of traders will see that right around 96.5. But also note that the lows, as we've not made new highs, so we've basically broke out here. This was at the time, these were new highs. Okay, so we broke to new highs here, rallied a little to 96, came back, tested the 20-day, and look at the tail we got on that day, everybody. Was that spot on or what? Excellent tail, held the 20-day on the close, continued to move along it, held it yesterday at the low, today's low held it. This looks intriguing. And if we back this off to look at it on a longer term basis, boy, this starts to resemble a stronger, longer term trend than you might have noted in the daily chart. A couple of key things here. I've got a crosshair on what was at the time prior all-time highs. So I'm bringing that up because had you been a buyer back here when it broke to new all-time highs, you would have been needing to hold strong here when it retested, right? So textbook 101 type technical analysis, everybody. A breakout to new highs followed by the throwback to test what once was resistance can then become support, and that's what you've got there. And if that plays out the same, well, then traders would be looking for the similar, if not the same move here with the breakout it's in the midst of as we speak. Now, we know that's not a guarantee. You all know that. It's probabilities, but it worked before. Many traders will look at this and say, let's give it a shot. Let's see if we can make it work again. It may not. It might work out beautifully, but having the recognition that it may not work in our favor should help us out, because then we can minimize our investment a little bit, recognizing there's not a guarantee I'm going to be right. Yes, it's a breakout over the last 3 weeks, but there's no guarantee it's going to continue to move higher. So here's the opportunity I was looking for, and a trader could take that on. So let's go forward with the idea that we think there is upside from here, and we want to trade for a continuation move on this breakout. Well, one way to consider it would be just the range we've traded in over the last couple of weeks. If we want to try to keep this nice and tight, we've got a level of support at 94. So let's put that in. And then we've got another at about 96.5. So let's call that, I'm going to call it what it is. We're going to call it 97, pretty close to it. All right, so we've got about a $3 range, and that might mean that we can go from where we are. If we can get through 97, we could possibly see 100. Okay, now if that's the speculation a trader's willing to take on, well, then one thing we want to look at is buying something with a call that's going to be under 94, because that's going to give us a higher delta to look at, right? A higher delta will mean that we have a higher probability of that contract being in the money at expiration, and it's also going to give us a greater return dollar for dollar in price movement of the stock. So if the stock does in fact go to the upside, we stand a shot at getting a higher percentage move in the option relative to the $1 move in the underlying stock. So here, like I said, 94 is strong support as a 68 delta. Could go to 93 for a 75 delta, or the 92.50 if you want a pretty clean spread. Maybe what we're looking at is something like a 92.50 call long and a sale of the 97.50, locking yourself in to a $5 spread. That's one way that some traders might look at that. So let's do that as our example trade, everybody. I'm going to click on the 92.50 and sell at the 97.50. Now, it is notable, I'm only getting 20, maybe 25 cents there. So if it's a $5 spread and we're spending almost $3, I'm going to make about $2 in our best case scenario. If we wanted to go forward in time a little bit, what if we went out an extra week on this? Still the same thing, 92. Oh, we can't go. Is that August 20? Oh, they don't have 92.50s. I'd have to go to 92. There we go. 92 and say 98. So making it a $6 wide spread, giving it an extra week. Doesn't exactly help me out in this case, everybody. I'm just playing with the calculations a little bit, and that's kind of one way that some traders will do this, is just, all right, what am I spending for my approximate opportunity for profit here? So we'll do about a $6 spread, give it an extra week. 328 and the mid at 325, 328. Let's see if we can get in at 325. If we're risking 325 on a $6 spread, well, we can make the inverse of that. So 6 from 325 is going to be 275 as our max gain. And then our max loss of 325, assuming we don't take on stock in the trade. So now this is one where we might put ourselves into the trade, and then we could maybe make a majority of the max profit over the course of a very quick window of time and utilize that as a reason of covering the trade. But let's go ahead and put this one into our example portfolio, a new example trade opportunity. Now we are at a limit, so there's no guarantee we'll get executed on that. And then I thought we'd jump back real quickly, look at the vertical we've got working in Equifax. We put on a long 250 put, short 230 put, so a long put spread on Equifax, and it's worked in our favor. Thought we could peek in on it real fast, and as you can see, we got executed there on our Southern trade. So our Southern example is working out, but here we were expecting more breakdown from the Equifax position. It has worked in our favor, not necessarily to the level that some traders would have expected, as you can see from my measured move. But when we spoke last, we were up here at resistance. So the stock has shaved quite a few points. So in this case, looking at our time frame on this, we do have till next Friday on this trade, but we are in a position of profit on the vertical. We're up $262. So we could choose right now to go ahead and take our profits. And I'm going to say, why not? Let's take profits. Let's not look a gift horse in the mouth, so to speak. Could we let this go for another week? Sure, but profit is profit. We're going to go ahead and take it. So I'm going to right click in the vertical here, tell it to create a closing order to sell it at the limit, which is really the midpoint here. I'm going to come underneath the mid in the hopes of getting executed pretty quickly here. Let's go ahead and see what happens. All right, we got taken out and we got our profitable trade. So kicked one of the example trades out today, everybody, and put in another one for us. So moving on from Equifax, but we've got the Fastenal trade and we've got IonQ from last week, which is going to expire here this week. Reminder on this one, IonQ has earnings after the bell. And so we'll look at that, how that one played out. We'll look at next week. But they are announcing after the bell, so that could make a move here. So we'll want to keep that trade in place for earnings. So with that, we're going to wrap it up. I always appreciate you joining me. Lots of good discussion here today, but really good discussion in the chat. Thanks to Brent Morris for being there. Follow us on X. Don't forget to be subscribed to the channel here, everybody. And if you like the discussion, hit that thumbs up for me. We're going to get this one archived and into the playlist as soon as possible. We'd appreciate your thumbs up. Thanks for being here. Have a great rest of your day, everybody. We'll see you again soon.